G'day, it's Nav here from Lonsop again. Today I'm speaking with Nathan Rigney from NGR Accounting. He's been in business for over 6 years and he concentrates on SME business as his main expertise. Now today Rigney is going to talk about a very important topic that not many people talk about and think about, and that is SME poverty. Now Nathan, thank you for joining us. Tell us a bit more about yourself and get right into it.
Thanks, mate. You're too kind with that introduction there. But I guess what we do as an NGR Accounting is we're different to a lot of the other tax agents out there, in that we've got some programs that we run to look at more than just the compliance side of a client's needs. So typically what a lot of accountants do is they focus in on lodging BAS, lodging tax return, and there might be a bit of advice along the way. One of the programs that we've got is really focusing on SME poverty. And one of the things that we want to do is we really want to help our clients, actually turn a profit in their business. And the sad reality is, in business, there are a lot of people, a lot of business owners where their whole life in business has been stressful. It hasn't been enjoyable. It hasn't been what they set out to be. You've probably heard in the past that, how many times have you heard that people think they're going to go into business and it's going to be one big, great holiday? I can basically, I can leave early on a Friday if I want. I can go, pick up the kids and this and that. But the one thing that people don't tell you is how much hard work that's going to be, the hours, the nights you're going to pull, but also the stark reality of what actually happens is, are you going to make a profit? And sometimes what is probably best for some people is they would have been better off staying as an employee.
Very, very true, very true. Everything you've said so far is very true. Don't forget, there's also those people who think they're starting a business is a guaranteed retirement jackpot. They're going to make so much money that they're going to retire early or sell their business off at the end of it and have this huge amount of capital that will fund their retirement at 50 to go till they're 90 years old. I'm telling you, it ain't happening if you're not putting in the hours.
Yeah, and look, it's all about working smarter too, but it is so true. Some people don't even sell their business, they just walk away from it.
Why would you do that?
Well, that's a good question. Why? And I think it's because also they just haven't had that right guidance along the way. There are some businesses you can't sell and, not much you can do about that. But for those, if you've got the local bakery, you just don't close the doors, you sell the business. But the other thing as well is no one's going to buy a business that's not making money.
Correct.
You might sell it for something, but it's not going to be of significant value that's going to make your life significantly better. You want to be one of these businesses, and your audience might know about this. When you see a really good cafe is sold by a business broker, right? The cafes that are pretty ordinary and you wouldn't want to touch with a 10-foot pole, they're the ones that are selling on Gumtree. You want to be, when you're selling your business, you want to be able to be proud that you're selling with a business broker and you've got something awesome to sell. It's all about how can we, as an accounting firm, and what we actually do with SME poverty is we actually use the profit first. Have you heard about profit first?
Yes. At the end of the day, for me personally, I think cash flow is king, and then that's your day-to-day running, right? But for the survival of the business, if it's not making profit, you ain't going anywhere.
Yeah. So I'm actually a profit first professional, and what we basically do is Mike McCallowitz, he wrote this book called Profit First. And I guess what he wanted to do is he wanted to turn people away from focusing on profit being the last thing they think about. We want to be thinking about profit first, right? So
okay. Let's take a step back, right? So profit first is a great, great foundation for a business owner. Let's say you're talking to someone who is wanting to buy that local bakery, right? And he's come to you and said, "Hey, mate, I'm buying this bakery," and he's done your SME poverty course, so he's well educated and ready to get out there. How are you going to educate him, or what are the pointers you're going to give him to make sure that he is achieving profit first in that business?
Well, I mean, the first thing we need to do is really need to analyze how much, I guess, analyze the business, and that's by actually making sure that first of all they've got some really good accounting in place, so some really good bookkeeping. That's with profit first. Like, it's still important to run a good, set of accounts. But the next thing we do is we basically do what they call a profit first assessment, and that's to really help us review where the business is at, and then help determine the percentages of where we need to split money out between the different bank accounts. So in case your audience doesn't know, profit first is more about a bank balance accounting, instead of concentrating on the general like the gap accounting, where we do the general accounting principle, where we sort of run, like, instead of me sort of putting together a cash flow forecast and saying, well, you must have sales, this must have sales, that, and this is what your expenses are going to be. What we do instead is we focus in on the I guess what we call bank balance accounting. So because what a lot of people do.
So what I'm hearing is you want people to have money in the bank so that the survival of the business is going to happen. The other thing is that we'll be able to maintain a lifestyle.
Yeah, there's exactly. Look, the big thing is that if your sales for this bakery that we're talking about as an example, they might bring $10,000 of sales in for the week, right? Now, and I think where a lot of businesses go wrong, and I've seen this quite often, they don't realise that the $10,000, where all that $10,000 has got to go. So $10,000 has got to cover, your raw materials, right? So you got to pay for them. Then there's overheads for that, so the business operating costs. So we've got to keep money aside for that. And then there's taxes like GST, maybe your own personal tax. And I mean, what I should have actually discussed first, because it is profit first, is putting aside also the profit fee that you want in the business, and also making sure you get paid. So, but where a lot of business goes wrong is they take that $10,000 and they might pay those big bills that are there, but then they go, oh, I've got $5,000 left over and that's all mine. And the reality is, if they were to use profit first and have this really simple system, they'd realise, and once they've done their assessment and they know, I guess, the percentages of splits of where money, goes as far as profit and all that sort of stuff, is they're going to really identify, well, okay, maybe out of that $10,000, $1,000 is mine. But the next step from there is, once we've sort of done that, if $1,000 a week is not enough, well, we need to start looking at I guess, what's going in the bank accounts a bit deeper. So if, say, for example, like we've done profit first for a month or two, and we find there's not enough money left in the operating expense account, there's one or two things that are happening. We're either spending too much money, right, or our sales are not high enough. So maybe the prices you're charging are not high enough. So it's a bit of a combination of the two. And so by splitting, I guess, your balances into different bank accounts, what's going to happen is it's going to very simply identify where you've got problems. At the end of the month, if you don't have enough money there, it's going to really highlight that maybe you're overspending, or once again, you're not charging enough for what you're doing. Could be a combination of both. But it really highlights, because at the end of the month, you don't have enough money to pay out your expenses. Well, you're going to have to deal with it, because you only have, I guess it's what they call Parkinson's law. You only have enough demand for the resources to increase, the supply of what you've got. So the profit first, just confirming, so that system that you practice and actually
have success with, the customers get percentages coming out of their business income? So it's like fixed percentage, or is it a variable percentage?
No, it's a fixed percentage. So what we do to start with is, with a bakery, for example, we would take, you got your turnover, which is your revenue account. That money comes in, and periodically, so say every 2 weeks, we look at that money in that account, right? And then if there's, with a bakery, for example, there's a lot of materials that go into to sell their goods, their cakes or bread, whatever they're selling. So essentially, those raw materials, those expenses get paid first, and then whatever's left over after that, then we split out via different percentages where the funds go. So as an example, right, we might go, okay, we'll set up, say, 5 foundation accounts. So the first one would be, say, that income account, which is already there, it's actually bringing your sales in. And then we said there was another account for your materials and substitutes. So that might be, say, 20% of your sales is those like flour and I don't know, icing sugar and all that sort of stuff. But then from there, whatever's left over is what we call our real revenue. And it's this here where we're going to split it between a bank account that has profit, a bank account for expenses, like your everyday account for all your everyday expenses, another account for your GST and your taxes, and then another pay for your owner's pay, right? So we split this money out, and then we live within the means of what's in those accounts.
That's, you struck another good word there, living within the means, some business owners make the mistake of splashing out on flashy cars, for example. Real estate agents are a good example of this. They have to have a nice flashy car because that makes them look successful.
And look, that's okay. And that's okay to go and have that. But you need to work up that account. So, like if, for example, a car was important in your business, and I guess in the real estate as an example there, if they really need a BMW as that car, well, that's fine. We build up to that point where we've put the money aside, as for that. So if, say, for example, if a real estate agent was starting out, what we want to work towards is actually putting money aside in maybe another bank account, which is just, money put aside for the BMW to buy. So then when it comes to actually buying it, we're buying it straight out of cash that we already have, right? And also we're not financing it. So we're using it out of money that is there to buy it. And look, it's okay if that's what you want to do. Look, I always like to sort of think, like, look, if you were a builder and you're driving around a Range Rover, well, I can't even justify that one. At least the real estate agents.
If you put roof racks on it, you can carry maybe a ton of 4x2s.
Yeah, and that's and the other thing I often hear is, but when I go and do quoting, I need a nice car to pull up in. They want you to build their house. They don't really care about what car you drive. If you turn up in a truck, you're probably actually giving a better whole lot of credibility straight off the cuff than someone who's turning up in a Range Rover. Well, I think if you're in a Range Rover, you've never picked up a hammer in your life. You're just a guy who quotes.
So what would you say if someone decides to implement a profit first structure? Would you call it a structure, I
would call it a system.
A system, a better word, yeah.
System.
Yep. Into their business. What would you say is how much improvement that gives the chance of how much the chances improves that their business would survive over someone who hasn't implemented a profit first system?
It's probably about a 68% increase in ability to actually stay afloat.
That's a pretty big number.
But also just not afloat, like we're actually going in the right direction. Like this is so vital, and yeah, it's going to mean like like the last thing you want to do is, like, with a lot of businesses out there, right? They're not, like, a lot of directors aren't paying their super on time.
Mm-hmm.
Now that's actually an offence, right? You cannot pay the super just as much as you can't go pay your GST and your withholding tax on your employees' wages. So, you know, like, if things get to the point where, I guess, you're not making enough money and you know, you're on multiple payment arrangements, always catching up, always need that next sale to survive. And what actually typically happens with businesses like this is that they get into this state where what they start doing is they start undercutting, right? Mm. Because their money mindset has completely changed too. They're just in survival sort of zone, right? So they start doing things actually that hurt themselves even more. And, you know, what they typically do is they start undercutting everyone, and they're the cheapest out there. But then when they start doing that, it brings this profit margin down to the point where even sometimes they're taking on jobs that are at a loss, but they're so desperate for that bit of cash just to survive another day. I mean, now, if you're at that state, you're going to need definitely a lot of assistance to pull yourself out of that. But also, sometimes when businesses are at that point, sometimes what you need to do is you need to go see a liquidator to basically wrap up your company, go for a voluntary insolvency, right? So
some people,
if you don't want to get to that point, right? And just to add to that, if you do get to a point where you've gone for a voluntary administration, so you're liquidating the company, if you haven't paid the super for the employees, it's actually coming out of you as a director. You're coming out of your own pocket, and that's the same as well with the withholding tax on the wages too. So really, if you're starting a business or you currently are in business, and you're not using profit first as a system, or generally even if you don't have a system, you could find yourself in a position where, worst case scenario, you have to go for a voluntary administration. And trust me, it's the last thing you want to do, because it can also tarnish your name, and there's so many flow-on effects.
Well, there's the thing, a lot of business owners they cannot see the failings, right? So they need someone like yourself to come in and actually help them point out. So sometimes they need someone to actually say to them, mate, this is what you need to do to correct the ship, because you're about to hit the rocks.
Yeah.
Right?
Well,
so,
the way I like to think about it is, with this profit system first, this profit first system that we've got that I implement, it's just not a fix and forget. So, you still get myself or a profit first professional to assist you during the process. And the reason you do that is to stay accountable, right? So just like, going to the gym and trying to lose weight, like, we all know how to do it, we know what to do, but the best workouts are often overseen by personal trainers. And really, if you want to use that analogy, like an accountant like myself who is trained as a profit first professional is, I guess, your financial trainer. And I guess I always like to look at ROI. The return's there because if at the end of the day you're making more money, before where you probably weren't even know where you were at about what profit you were making before, or you were making no profit, like the fees that I guess someone like myself charge will just pay for itself.
So if you really want to get buff while getting your accountancy done, pretty much go and contact Nathan Rigney.
Yeah. Yeah. So
that's great points. Even though we're talking about SMEs, people can actually apply profit first to their personal budgeting as well. One of the great books is The Richest Man in Babylon, and one of the teachings in that book is you pay yourself 10% from your wage. And it's a very similar principle to profit first, which Nathan teaches to his SME clients. But for personally, if you're not a business owner as yet, you can personally think about paying yourself first or allocating a percentage of your wage into an account that's your savings for, it could be your emergency fund or future fund for your home loan deposit, could be anything.
Yeah, what I would suggest to your viewers is a book like Profit First is a must read, regardless if you're in business or not. You might know someone's in business. Now, personally, I'm not a big reader, but the way I did was I actually went to Amazon and got the audiobook, and actually did get the physical copy as well. But I love doing the audiobook and listen to that and actually get the book and just highlight as I go when I hear different things that I think are valid, I think that are important. But yeah, look, and you can use it. I mean, there's other books that are very similar to Profit First on a personal level. Even like The Barefoot Investor, that's another example. But I think, there's many different systems that are out there, but find a system that works for you, and then adopt it. And you might tweak it a little bit, but yeah, it's about having a system and actually doing something as opposed to doing nothing. Take action.
Well, talking about Barefoot Investor, not many of his subscribers were very happy when he wound up and they didn't have access to any of the past subscriptions. So yeah, they weren't very happy. Anyway, thank you, Nathan. It was wonderful talking to you. Would you like to give us a short summary of what you've spoken about, just a quick summary?
Absolutely. So, okay, so what we said very quickly was we talked about SME poverty and then adopting the Profit First methodology to help reduce poverty in your business. And this is by simply creating a system of 5 different primary bank accounts where you can split out your revenue to different accounts to pay for different liabilities or different expenses that you've got in the business. So more importantly, you first of all have profit for yourself and also don't spend more than you earn. And one of the benefits is by doing this, you can really highlight where you're undercharging or possibly even over-expensing certain items. So there are expenses maybe in your business that you don't need that you could cut down. Brilliant.
Thank you again, Nathan. That's Nathan Rigney from NGR Accounting joining us today, talking about SME poverty and how he's helping his clients eliminate SME poverty within their business. Thank you very much, Nathan.